All right. Hello, everybody. Welcome back to another episode of Boyz in the Hood Weekly. Roy, you want to explain what's going on with this new name?
Legalities. So apparently there's been some confusion. Possibly. Like we don't know like the whole story. All we know is each of us did receive a request, in this case from Robinhood. That was not a cease and desist letter, but it was a nice letter of saying, hey, you got to stop with certain things, including using the logo. We need to include a disclaimer, which I have mine in my video. I don't remember what we're supposed to say, but I'll just say we're not affiliated with Robinhood in any way. Our views and opinions all are our own, something like that. And take Robinhood out of the name. We didn't hear anything about the ticker symbol, so we're floating this. If they come back with a not as nice letter, we'll have to change it to like fans of a company that Vlad Tinov made or something. Just like, I don't know. Like at that point, we're starting to scratch the bottom of the barrel. But maybe you guys have some ideas.
We should call it Vlad Weekly.
Vlad Weekly, yes.
Vlad Tinov Weekly.
Yeah, so just the TLDR on this, Robinhood, they love the podcast, they love the show, all that stuff. They're fans of it, but we can't use their name in the title of the podcast. We don't know what's going on, but probably someone reached out to them and said, hey, like, you guys just got to make sure that like your name's not associated with it. It's regular stuff. They're getting sued by a ton of different states around sports, prediction markets, all that stuff. So they're a consumer finance company that's already under a ton of scrutiny. They probably don't need another headache. So yeah. Robinhood Weekly essentially is now Boyz in the Hood Weekly. We'll be talking about Robinhood every week like we usually do. Just going to change the name of the podcast. That's all.
And hopefully not have to change the name too many times.
Although Vlad Weekly, it's not a horrible name.
I've already got that logo too, if you remember that I sent you guys that we could use. Kind of looks like him.
It's a little bit too much glazing, but it's not a horrible one.
Which one's this?
Vlad Weekly.
Oh, okay.
That would be a bit of glazing. And then finally, we're just gonna say this right here: the views and opinions expressed here are solely our own and are not endorsed by Robinhood or any of its affiliates. So there you go. Having said that, we got earnings coming up, boys. We got some things to talk about. Tanner, how are you doing?
Dude, I'm doing well. Honestly, my whole brain and mindset right now is set on another fintech. So I got to adjust and think about a different company right now.
The old girl is calling you back, and you picked up, huh?
She is.
You picked up, huh?
Sophia is looking fine right now.
You've been cheating on her for really the past couple of months now, both of you, to be honest.
I bought more Sophia today too, by the way. So
yeah, she's looking good today. It was insane news. I honestly think they put out the best news that they've ever put out in company history.
So I want to talk about that later. We'll talk about.
Can you think of something else, Roy? I mean, come on, like.
I mean, there's been some great moments too, but yeah, this is Robinhood Weekly, sir.
Yes.
Oh no,
yes.
It is not. It's whatever we're calling it. Boyz in the Hood.
Boyz in the Hood Weekly. We'll talk about the SoFi news at the end of the show.
And we're going away from that name too. So.
Yeah, no. Hold on. Did you guys actually get a letter from SoFi, or you're just changing?
I did not. I did not. But I'm like way down on the totem pole. I wasn't initially on that. So
no. But why are they saying Tevis got a letter?
Tevis didn't get a letter.
Okay. See, the chat was saying Tevis got a letter, and I was like, I think you guys are just doing it as a preliminary action. There was no letter.
Yeah.
Right. Okay. So that's what I thought. Makes sense. All right. Cool. Hoodies. So small little updates this week. I think the big thing is we've got earnings coming up. Obviously, we've had a ton of macro volatility. Earnings is next week on the 30th, I believe. No, the 30th. So about a week and a half away. We'll do an actual earnings prediction episode going into earnings. But based on everything we've been experiencing, Robinhood getting to #1 on the App Store, which was really cool that we saw a couple days ago. I guess, Roy, I'll hand it off to you. What are you expecting going into earnings? And do you think Q1 is still going to be okay?
Yeah, we already know most of the numbers through March 28th, I believe. So there was a couple more days left. We don't know all of the numbers. So certainly events contracts, I'm sure we'll maybe talk about that, and Masters and Kalshi and some. There's a lot of news, guys. There's a lot of little news, like no like big massive stuff. But yeah, earnings will be really good. They don't do guidance, and that's actually one of those things that has worked out fine for Robinhood companies. There are other companies that do that too. Robinhood does put out monthly numbers, so it's not that big of a deal. But I think a lot of companies are in this hard place when they're trying to guide. And I've seen some companies issue 2 sets of guidance just based because of the uncertainty. But Robinhood doesn't have to worry about that. It's just like, hey, we never did guidance at all. So yeah, have fun, you guys. Now, one thing that I think will be pretty interesting is if we see, as far as users and active users, I'm really curious on that. So IBKR, this is they had earnings this last week. Is it this week? It's been it felt like a long week. I think it was last week.
It was last week. We'll talk about Schwab that had it.
And they added more new accounts in the quarter than any time in their history, period. And you can see this other spike, that's 2021, Q1 2021. So I'm thinking that we see something like that for Robinhood too. I don't see a reason why we wouldn't. I'm very curious how that 1% match for crypto went. Events contracts, like if not just the monetary amount, like we have a pretty good idea on that, I think. But like how many new accounts actually came on board for that? I think we're going to see meaningful acceleration in that. And we know we are seeing that for gold as well. But I'm also very curious where we're at as far as margin. I've heard some different things, but that's one of those things where we didn't get the peak in March, I believe. Unless I'm forgetting.
Tanner,
but yeah, good numbers, not as good as last quarter. If people have quarter-over-quarter concerns, I don't think it'll be a surprise that they're not going to do in crypto what they did the previous quarter.
Yeah, exactly.
Tanner, you saw IBKR earnings. We'll talk more about Schwab as well, but your kind of top-line expectations for earnings going into next week.
Well, I mean, I'm trying to put the numbers together, and I keep coming out with a similar number, which is just roughly around 900 million, maybe even a little bit shy of that, 880, something along those lines. And whenever I look to Wall Street's expectations, once again, they have me beat. Let's see here. Bear with me. I'll get the exact number.
I'll pull it up as well.
909 right now. It actually was 917 the last time I checked it. So 909, I guess they're coming down. But still, that might be a tad high, maybe. Anything over 900 might be pretty hard to hit. And it's because of crypto. There's going to be a big adjustment here. So essentially, the way that I see it is last quarter, we did about 358 million. In this quarter, I suspect somewhere just north of 240 million. So, you're talking over 100 million less just in this one line item. Obviously, there will be other things that can make up for that. Event contracts might play a part, even credit cards to some degree. And the main one that I think everyone is not thinking about is instant withdrawals. Instant withdrawals is such a fast-growing line item for them that I think that we could actually see many more millions due to this product alone, which is very funny. Not 100 million though. That's the problem.
Yeah, I agree. I haven't fully run my numbers yet for earnings, but I agree. I think 900 is where I'm getting at. Like 895 to 905 is my range. The interesting thing here, and I think this segues into IBKR and Schwab, is IBKR crushed it. Like they really had an amazing quarter. But the stock still fell 10%, and I think it's because the street was scared about what is Q2 going to look like. Schwab today beat on both metrics as well. They now have 9.93 trillion under assets, which is incredible. EPS is up 41% year over year. Revenue's up 18%. They have a record number of users, record number of assets. I guess the question here is Schwab and IBKR emblematic of Robinhood having good earnings, and will the street actually respect it, or are they going to be afraid of Q2?
Well,
yeah, I think.
Schwab.
Go ahead.
Okay. I was going to say that they both were not down nearly as much as Robinhood for the peak. So I think that probably was a factor with IBKR. It hadn't dropped as much as expected. Schwab, likewise. So that's a factor. Of course, they both had very good earnings too. And I think, most brokerages are going to do well. I don't know. With as transparent as Robinhood is on the numbers, there's just not going to be that many surprises, especially since they don't do guidance. So there will be some, but not anything earth shaking. So that hasn't stopped the market before from either, getting really excited or selling things off. But I would be surprised if we see a massive move either direction. We'll see.
Yeah. You know what? I cannot wait for Robinhood Gold numbers to continue to tick up in revenue. Like this is going to be a massive growth, if not the largest quarter-over-quarter increase in gold, if I'm not mistaken. Let me see if I can find that. What are we at?
It's gonna be, I think, around 650,000 new members this quarter.
Yeah. And so, what do you have there for 3.25 million, maybe total? So
yeah, pretty much roundabout.
Yeah, I think this is really interesting. That's a really fast growing part. And another thing that I think people will not think of is just the total share of wallet over time will continue to increase. So even whenever crypto, in terms of total market volume, decreases, potentially Robinhood's won't decrease as much. But these are mainly for forward-looking quarters, like for Q2. For Q1, we already know all the metrics. So I'm not too... unlike other companies that we end up following, it's like we can get pretty close to the estimates on this one. And so I do see that there will be a slight tick up in net interest revenue than last quarter. I have about 326 million, but I was high on the last quarter as well. So hopefully that's where we can find that break, but still I'm not near Wall Street, and I think a slight miss will make people upset. If we can end up beating it, then great. But yeah.
So we're all bullish on Q1. Q2 is obviously going to have some headwinds in terms of lack of trading activity, like crypto. The number one on the App Store stuff that we saw, along with this new changing of the App Store. So now they are calling themselves FinTech Super App. I guess that's just them getting into them embracing the different verticals they're getting into, which maybe offsets some of the volatility of trading volumes going down.
I think it's still too early to change the name, but they're on their way.
Why? Why do you think it's too early?
Banking's not there, not to the degree that people want it to be, at least.
And the credit cards aren't as rolled out as Vlad made some comments on that at the event, but that they're accelerating that quite a bit. But yeah, like I probably would have given it another year, but I mean they're going that direction anyway. We all know it, so it's fine.
Yeah. Also, did you guys see the Solana news that they did?
Yeah, I was just about to bring that up. So why don't you intro that? I'll bring it up right here.
You didn't see it, Roy?
No.
They're just giving a little bit of extra benefit to Solana users if you're Robinhood Gold. So no network fees for transactions, as you can see. Whether you're swapping tokens, you can also do that up to 3 times a day, all completely free. Now, what's so funny is this is almost a near zero cost for them anyway. Solana is like one of the cheapest, networks, or I'm missing the correct term there, but I think Solana is actually, in terms of cryptocurrencies, they're the largest cryptocurrency that I hold as a bet and as an investment. And I just like this deepening here. They also had some Coinbase news with Solana as well. So it was a really good day.
Do you think this is something to do with Bitstamp or anything like that, or this is just kind of more crypto innovation they're going with?
No, I think this is just Johan putting out some things that are leading up to the June event that they're going to have. So we're going to see a lot of crypto products, and I'm glad that they end up showing off stuff like this, because if they're willing to show that off and not hold it to the update, they're looking at this and going, hey, this is a really small update, which it is, but I'm glad that they didn't include it.
So I'm guessing this is more of the same reason why we saw the 1% match on crypto earlier. They're wanting to increase the assets under custody, especially with crypto. And I'm not certain, but I'm guessing that at some point they're going. Well, I'm like they talked about it in Investor Day. They're launching crypto staking at some point. I think that probably prevents people from moving as much crypto as they might otherwise. Like in
Definitely.
the 1% match scenario, like I moved my Bitcoin over because I was like, I can't stake that, so why not? But like things that I actually stake, I have it in my own wallet. There's no reason to do otherwise with it at this point. But I do think that staking is probably coming at the crypto event. it wouldn't shock me if crypto lending is there too. And that's been, I don't know how that'll do in a crypto winter. I wasn't paying attention in the last winter at all to that, but I know that that's been very lucrative for a lot of companies that engage actively in crypto lending with certain parameters. And you don't have the disadvantage that you do with lending United States dollars when you're not a bank and you don't have a banking license. So I'm wondering if they're setting that up, if they're getting people to bring stuff over there in preparation for that.
Yeah, I think that crypto event in France, we haven't talked about it much, but all we know is that Vlad said he was giddy leading up to the details of that event. And
I mean, like, you have that, which is really interesting, like the 1% crypto match. I'm sure probably there's been other platforms that have done some sort of crypto match, but that's the first I've seen. So that piqued my interest. And then the other thing that really got my interest, and this is a little bit while ago when they came out with the 10K, they have a massive, and I mean a massive amount of stable coin, and it's not all USDG that they're holding. And I think that we'll probably get to see with the crypto event why. But it's intriguing. It's very intriguing.
Yeah, it would be interesting to see, because the rates on crypto are so much higher than equities, to see where those promotions could lead to and get really aggressive. So, for example, they only did 1%, but it was for a 1-year lockup, I think, if I'm correct.
Yeah.
For the other ones, they did 2 years, and it was a 5-year lockup. I wonder if they could do similar things where they could give out, 3%, 4%, even 5% over a multi-year lockup that just creates so much buzz around, sort of the crypto sphere. Now, for them, 5% is, whatever. Like, they're going to lose that in a day or win it back in the next. But still, I think a lot of people would consider switching and locking up for a long period of time, especially whenever tools like staking are available during those periods, and putting that more onto Robinhood's platform. And the reason why they'd be able to pay that much is because, well, one, a larger percentage of future purchases, future sales, equity staking or equity stake would all end up on Robinhood's platform as well. So I think that the numbers that Robinhood has put up on the equity side has been large, but they're nothing compared to what they could put up on the crypto side, and that could create a lot of marketing or large marketing efforts.
Yeah, I think that's fair. And Bitstamp hasn't closed yet either. It's going to close in first half of this year. So I think we have till June when that closes. Anything they can do to get an incremental boost in people trading crypto because of how much freaking money they make off of that, to me, seems to be a win. But definitely, we need crypto to be in style in order for that to play out.
Yeah, that's a nice thing about what they've been doing with their businesses. It's not diversified in the sense that if there's a bear market in crypto winter, like, that's going to hurt. But they have a lot of different legs of that of their business that are at that 9-figure rate. I think they're up to 9 now, if I'm not mistaken. Maybe it's 10. It's close to 10. I know it'll be there just in a matter of time. And the question is, like, whether that's going to be the Legend, the desktop trading platform, or futures, or events contracts. But all three of those, I think, will get there. So,
yeah. Man, I don't know if you guys saw the iced coffee hour recently.
I should play a clip of that. Hold on, you're right. Yeah, let me get that up.
While you bring that up, I'm just gonna go get my water real quick.
Okay,
it's unbelievable what he says.
Roy, did you get to see this or no?
No.
Okay, so this is Chris Camillo, who is obviously a big fan of Robinhood. He's an amazing investor. For those that don't know who he is, I had him on my channel before, and his favorite stock to buy in the midst of this volatility is Robinhood. And the reasoning behind it, I think, is really, really interesting. And he talked about it here.
What's up?
Right now.
You haven't played it yet?
Yeah, I'm pulling it up right here.
Yeah, it's really freaking great.
Yeah, okay,
but it's also true. Like he's very right.
I would not have my money in Robinhood 3 years ago. Today, I think they.
I didn't 3 years ago. I'm saying today I do.
I think they learned their lessons. I think they're becoming a grown-up company now. I bet their compliance team is meaningfully larger today than it was in 2021. I would feel relatively comfortable having a large amount of money with Robinhood. That said, I was with Ameritrade. Before that, Scottrade got acquired by Ameritrade, and then Schwab acquired Ameritrade. Now, as you guys know, I'm publicly audited every year, and they've told me not to move my accounts because that would be like a red flag. So I have like an 18-year track record within one account. So I'm sticking with Schwab for that reason alone right now. But also I have a private guy. I can get him on the phone if there's an issue. If the site is down, they'll manually place a trade for me. I feel like if anything horrible happened at Robinhood, you'll never get someone on the phone like that to do that for you.
I've had good chat conversations with them, but I have also had the Schwab guy come to my house when I needed some papers. He drove to my house.
I can drive to the Schwab office in our neighborhood if I needed to.
You should ask him to come to your house. He'll do that.
If the consumer app was down, I'd be like, place my trade now, sell my stock. If I don't know, an earthquake went off.
I had a rumor for Robinhood that they might get into banking, and one of the services that they might offer is a Uber service where they deliver cash to
They already do.
Yeah.
They've announced
That's
that.
it?
Yeah.
Okay. I
So
haven't seen
you
that
can,
yet.
it's not in the app yet. It's coming, I think, this fall, but you'll be able to, instead of going to an ATM, you'll be able to access your Robinhood premium banking service. They can't call themselves a bank because they're a banking service. But you'll be able to, on your phone, in the Robinhood app, say $100, here's where I am, and someone will bring you $100 in cash.
How is that profitable? How could they do that?
I don't know why they did it.
Can you pause it?
Care about it. It's not why I'm investing.
So he goes on to say that they think it's free, but it's an actual tipping service. There is a $5 fee.
Oh, there is.
So you hope to pay for some of it or whatever. So they were a little bit misguided in what's going to happen. But I actually think the clip was either before or after this. But this is not exactly what I was talking about. I was talking about him talking about it being the largest financial institution.
I thought he mentions that in a couple minutes. Let me get that exact clip.
While you're pulling that up, I know that you saw this, Tanner, but Amit, did you see Anthony Noto's interview where he mentioned Robinhood? I believe it was yesterday.
You did see it.
I did see it. I found the clip on Camillo. Let's just play this real quick, and then we'll talk about Noto as well. Yeah, it was about like a minute after that's part.
See? And there's what you don't see. Like, when did we start talking about them getting into sports wagering? A year ago, right? We had conversing about, and now they're in sports wagering. This team, Vlad and his team, they're animals. Like, they're animals. They're gonna ask for forgiveness later. Anything that remotely touches money in any way, they're gonna try to take over. They're gonna try to Amazon it. Like, if it touches money. So you've heard the rumors about real estate, like eventually.
What's this with real estate?
Eventually there's rumors that they would potentially get into.
Was that a real rumor? I just thought you made that up.
No, that is absolutely real. And I
Vlad did mention that to Bloomberg that they are looking into that.
Believe it's going
so
to
what
happen.
is it? You have to explain it now.
Well, that they would eventually get into the broker game as well. And transact.
Oh, so I would be able to buy a house,
buy or sell your house through the Robinhood.
Yes, and they would get. So when you think about when all these companies started up, maybe it was like 7 years ago, and they were trying to integrate the real estate tech stack to have basically commission-free brokerage, right? They didn't have enough funding, and the technology wasn't there, and they just didn't execute well enough to pull that off. It's really expensive to market on the front end, as you know, to get your customers. It's a lot of work. They were too early. I think Robinhood is going to wait for the right time, and they will have the right resources. And the beauty behind Robinhood is they will already own the customer base. Right. So they're just going to layer it in as a product. I don't know how long until it happens. I just know they will try to make that happen. When you think about a financial institution, they're probably thinking larger than any financial institution on earth today. They want to be involved in more things that touch money than JP Morgan is.
They've stated that they want to touch every dollar that you interact with.
And if there's one thing that gets me going, it's a big company that thinks like a startup. That's Tesla, right? I don't know if you guys have ever had the privilege.
So pretty bullish on Camillo. He then goes on to say that this is the #1 stock he's buying in this dip, and he's like quadrupling down on Robinhood right now.
Yeah, he also goes on to say that with the whole startup culture thing, that he's seen a bunch of companies, I think he even mentions Yahoo or something that he was a part of, that he watched go from a startup to a more conventional business. It's probably one of my largest fears with SoFi, right? Is the slowing due to compliance issues, that there's more cogs in each system that actually bogs things down. We're not seeing that from Robinhood at all. And in fact, there was actually a period in Robinhood's time where they did start going that direction. They doubled their head count because trading volumes skyrocketed, and the amount of new products coming out fell to the ground. And then they cut all those people, fixed the problems, and they said no more. And now it's seemingly a good lesson learned, and hopefully not too painful for the future. So they're a very, very, very strong team now.
Roy, your take on what Camillo said, that this is his #1 dip buy?
Yeah, I mean, we've been all seeing it, firsthand, and I'm pretty confident that I added more to Robinhood than any other stock this year. I've not added in the last 3 weeks. I've been good. Probably will add late next week, but might have to wait another week. Can't remember when the 25th is. I guess, yeah, I'll have to wait another week. So hopefully I'll get a better price, but it won't be like meaningful add at this point. I've got Hood up to around that 10% allocation. I think it might be just under right now, where I can add maybe another 100 shares or so. But yeah, I'm glad to do that. Glad to own it over the long haul. It's a very cyclical in the sense that it's going to follow the market cycle. It's going to be very volatile. We've seen that. But for myself, like looking long term, it's hard to not see Robinhood do really, really well. Even they'll have some misses. They'll have some things that do not go right. But we've seen them execute on such a high level that they're not going to have a lot of those. And when they do have a miss, they're not so prideful and arrogant that they're not afraid to just say, okay, that's not working out. We're pivoting. We're not going to do that. And I love that about the company. It makes it really easy to invest in. And you don't see that necessarily with many other companies. I think that I'm on the verge, and I probably need to see this another quarter or two of like giving them unicorn status in my portfolio. And what that means is I'll allow myself to allocate as heavily as I want to that company.
Over your 10% threshold.
Oh yeah, over 10%. The only other company in my portfolio where I have that and I'm comfortable doing that is Palantir. Tesla, I think, is a unicorn. I just don't want like 50% of my portfolio Tesla.
Yeah, and look, I think if they tank on earnings, it's a gift, dude. Like we already know the execution is there. If they somehow go to like low 30s or below 30 and mid 20s again, people, yes, you will have paper losses, but this might be a year where a lot of people have paper losses. It is what it is, but you got to find ways to deepen the conviction. If you have the conviction, you have to find ways to deepen your position sizing, and a cheap stock that falls 30, 40% is the best way to do it. But I don't think we're going to get there yet until we have a recession. But if we avoid a recession, I think we're going to be okay.
Yeah. I mean, like, and if we keep falling and things just get cheaper and cheaper and cheaper, what I'll probably do is just begin to trim some of those companies that I don't have the same level of conviction in. And so I can see myself horrific, and we get a crash. I don't think we'll get a crash, but let's say we get a crash that's down 30% from the peak. At that point, I may just be in 3 companies: Palantir, Robinhood, and Nvidia. Call it a day.
Crazy.
And the other companies, like, I think they're great. I think they're awesome. It just depends on the valuation, though.
And SoFi doesn't fall on that list, eh?
It's not a unicorn.
Wow.
It's not. It's a good company with incredible tailwinds. But if we see a market crash, I'm guessing it's because something is broken at that point. I mean, like, and it will still be painful for SoFi, even though today I bought more SoFi. I think it's positioned very, very well. I do think that they probably hit 25 this year. The loan platform business, which we've talked to you about several times, Amit,
So
It's just-
let's properly transition into that. So I want to talk about Loan Platform. First of all, here's Noto yesterday on his first podcast in a long time. He did not do it with Tanner or Roy. He did it with a SoFi employee.
That doesn't. Hey, you know what?
I didn't say I'm not implying anything. I'm just saying he did it with Liz Thomas. But yeah, this is what he had to say.
What do you expect fintech to look like 5 years from now? And how does also how does AI play into that?
Well, first, I think fintech, just like retail and travel and media, is going to be a winner take most area. And that means the digital companies, the winners in the digital world, in the technology world, will take most of the riches. I think it will differ by category. I think SoFi is positioned to be the winner that takes most in the one-stop shop. Robinhood is positioned to be the best in taking the most in just pure brokerage and trading and investing. What they do outside of that is yet to be seen. I think Affirm is great at buy now, pay later, but there's also Klarna and Block in that regard. But I think the companies that are leaders in their specific sectors today will end up being those leaders in the future. I think it's very hard to change colors overnight.
He then goes on to say that the ambitions for SoFi are to be a top 10 financial institution by market cap and a top 15 tech company by market cap in the United States. Let's start with Roy. Roy, what was your reaction to that?
On the Robinhood bit, I agree, and it's nice to hear him say that too, because he's thrown some shade at Robinhood before where he's like, yeah, they're killing it with their brokerage. And the rest of the stuff, he's like, we'll see. Some SoFi bulls had the take of SoFi is going to, because of the crypto stuff, they're going to eat Robinhood's lunch. It's like, I don't know.
I saw that comment too. I was like,
no, like it's good for SoFi that they're launching that. It could be very good too, depending on what they're able to do with Galileo. But no, like those are spaces that Robinhood owns and they'll continue to own and expand. And they're, I don't know, it's going to be interesting, but I think he's right that those leaders that are in the market right now that are doing very, very well, usually they're there in that space because they're hungry, quality companies that know how to execute, know what that next step and stage is. Robinhood, I think, does it just about better than anybody on that level. So yeah, they're going to be, I think Robinhood for sure will be a top 10 finance institution at some point in the future. It's going to take a while. SoFi I'm less sure on, but if you shoot for the moon and you still make it out of the atmosphere, that's great.
I think the saying is shoot for the stars, end on the moon.
Yeah, I was like, I got it wrong, but
and make it out of the atmosphere. What's it called? So I actually didn't think. Okay, so a couple of comments, because you made some comments on your live stream and everything, Amit. So one, I wanted to hear more from Noto. He was quiet. He went on a podcast. I don't care that it was mine. I don't care. They did answer a lot of questions that I think a lot of people were still looking for, and that was reassuring. So I was very happy that he did a podcast. Even if he wants to keep it in-house through SoFi, continue to do those. Would love that. And then in terms of his comments about Robinhood, if you go back, he thinks a lot about what he wants to say about Robinhood. So he said a good comment, but he definitely is not confident that they're going to get out of brokerage. I'm very confident in that. And then in terms of the top 10 comments, top 15 comments, I actually didn't think that was all that crazy. Once you actually look at the numbers, it places them at about like $150 or so billion, which is large.
Wait, top 15 market cap tech companies more than 150 billion.
Well, actually, it's 83 billion. Intel.
No, hold on. Top 15 tech companies by market cap is like
U.S. tech companies.
Yeah, Visa is number 15 at 650. But what are you talking about?
Well, so it depends on what you mean by top 15. So if you search by
market cap,
yeah, but do you place Visa as a technology company? I wouldn't. I'd place that in terms of financial institution. I think
there's a lot of technology associated with Visa.
Yeah, I'm sure. I'm sure that's not what he's saying. Why would he say top 10 So if you say top 10 financial institution and top 15 US tech company, it places at about the exact same market cap, which is about 150 billion.
No, Tanner, there's no way. A top 15 tech company in the United States, if you just go through the list, JP Morgan's at 644 billion, Visa's at 635. I mean, why
are you calling those tech companies?
Well, you would say Visa and MasterCard are not.
I wouldn't say Walmart, Eli Lilly, JP Morgan, Visa.
Yeah,
you're looking at top 15 companies
in the US.
Okay, so what is the 15th tech company by market cap to?
I just told you it's here. I did the whole list here, so I'll tell you what the top
list.
I made a video about this. Apple, Microsoft, Nvidia, Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta, Broadcom, Tesla, Oracle, Salesforce, Cisco, Adobe, Qualcomm, AMD, Intel. At the bottom, you have Intel, 83 billion.
Sir, where is Palantir on that list?
Not on the list.
Well, take off Intel then, put Palantir up there. That's
your list is invalid.
I think you've left off a lot of companies, Tanner.
My list was where's
Intuit? That's a 585. That's a $1.4 billion company.
My list was Grok Deep Research. Blame them.
Oh, dude, 83 billion is not top 15 tech company in the United
Palantir, I would consider a tech company. I wouldn't consider Intuit. I'd still put under financial services or something along those lines.
There's no way in hell you're
when you didn't mention Palantir, I'm like, dude, you're gonna come on here and quote that list, especially for Amit. Like me, like fine, whatever, but like Amit, I should take that pickleball paddle behind me. Well, never mind.
No, but what about Spotify? They're 117 billion. Why is that not on the list?
I'm just telling you what Grok fucking told me.
I'm trying to tell you that you're trying to get the number to be reasonable.
No, okay. So this, okay, this is
hold on. Let's not beat around the bush. What Noto?
Hold on. Let me explain why.
What he said was insanity. The idea that they could be a top 15 tech company was such a load of you know what that I almost vomited hearing that. I was like, wait, what did he just say?
So I went through because I need to explain my bad research then in this case. Whenever share my screen right now, thank you. Whenever I was looking through this list, I went on Grok to ask for this list, and then I also went on ChatGPT, and it gave me the exact same list. So
forget your list. Like your list is what no one's blaming you for the list. My point is just we're talking about minimum, in my opinion, 250 billion.
But then I went to top 10 U.S. financial institutions that also placed me at 150 billion.
Okay, so I don't think the top 10 financial institutions goal is crazy, but the top 15 tech companies, when I heard that, like, I feel like I was the only guy objectively being like, what, like, is he smoking? Like, what is he saying? Like, where is this coming from? Where is this ambition coming from? Because I don't think
he's an ambitious guy, but
okay,
I don't see the top 15 tech companies.
But there's a difference between ambition and delusion.
Well, it depends on how high you want to put it. Like, I think if he shoots for a $200 billion market cap, that's fine. You shoot for that's
20x from here, Tanner.
I get that. But you know,
that's like me saying I want Palantir to be worth 5 trillion.
Sorry?
That's like me saying I think Palantir could be 5 or 10 trillion. Like I think 1 trillion is possible.
Palantir did it on 30% growth rates.
No, but there's a reason, and I've told you the reason for a couple of years now, but you don't want to listen. But the idea that SoFi would get that multiple, come on, dude. Like,
and Tanner just exemplified one of the reasons. Those obviously weren't running on an ontology, otherwise they would have included Palantir.
Look, let me give my take on this. I thought, first of all, the podcast may be more bearish. He was asked the question called, what is your big, hairy, audacious goal? Now, if you've ever taken a business class or you got an MBA, there's something called a BHAG. A BHAG is taught in these economic books and management books on your big, hairy, audacious goal. The answer to that question that he gave, I genuinely could not believe what I heard. He said, I don't want to say it because someone might copy us. Now, hold on, let me finish. He said, I don't want to say it because someone might copy us.
I don't think that's too crazy.
Let me just make my point, then I'll give you the floor. I've never heard Jensen, Elon Musk, Vlad Tenev, Alex Karp, any tech leaders that I look up to that have built multi-hundred-billion-dollar companies ever shy away from explaining their goals or ambitions. Elon, you could say, is, the timelines are crazy, but they put it out there. And they don't act like third graders that are afraid of Jimmy copying his homework and taking all the credit. That's the vibe I got from it. Maybe it was an awkward moment, but it was unbelievable in that moment that he actually had the propensity to say, I don't want to say what our goal is because people might copy us. And then number two, I like people who are realistic and ambitious. And when you say, hey, we want to be a top 15 tech company in the United States by market cap, and you can't even sell covered calls on the platform, and Galileo's not growing. I'm not saying that can't happen, but that assumes a 20x. And I think he's trying to get the base excited, but there's not much to be excited about because I don't think the words have any merit to it.
Okay, so I think that if you were to ask him what his long-term goals are, they would be identical to Robinhood's. Be the largest player, share wallet of all financial services. That's so whenever you ask, oh, what does Jensen or what does Elon or what does Vlad think about their long-term goals, I could guess for them. It's to be the biggest in their respective industries and more. I think that the way that Anthony Noto was thinking about that question, because obviously he would have said the exact same thing, was more near term, what they're working on and where he wants to go. So I don't think that he did want to say something along the lines of, like I said, get into retail services or non-financial products to loop them back into SoFi Plus, because that's actually what I think their goal is. Very Nubank-esque. But I really don't think he wants to say that because
why can't he say that?
Well, because
what, Tanner? Why? Like,
copy it.
Vlad literally told Bloomberg a month ago, we want to get into real estate. Chris Camillo just talked about it. Do you think he's worried about someone stealing their idea?
I don't think it's about, yeah, I mean, that's a fair comment, but like, I think
you
that
got to admit that's ridiculous. Like,
he doesn't win anything either.
I'm hearing this and I'm like, what am I listening to right now? How could you be saying you're afraid of someone? Like, this is technology. This is capitalism. Like, it's execution. The idea that someone's going to steal your lunch because you say something on a podcast, I just couldn't believe it. I really could not believe it.
Yeah. I mean, like, I don't know. There was probably like a variety of factors. One of those two is, it just may not be the right time to announce that. You guys know the organization that I lead, and there are things that, I'm working on developing with my team that we have to play close to the vest and only share with a few certain people until it's the right time. And there's no bad surprises. It's all good. It just, there's a timing to things. And like when I first started the organization, I thought the timing was a lot sooner than expected. And one of the major things that I wanted to do this first year, I had to pull back on and just say, hey, the foundation is not laid yet for this. So I think that there's probably an element of that too. But he gave one reason, which somebody's stealing it. It is a little bit silly. So
it's not a little bit silly, Tanner. You've got to admit that's ridiculous. That's like insane. Like, if even Vlad said that, I would be like, Vlad, what the hell are you talking? Like, you're afraid of someone stealing your idea?
Yeah, I wish that he gave an answer of just be the largest financial institution, completely eat upstart's lunch and offer all your loans directly, like underwrite every loan. Like there was an answer to that without giving anything away. But yeah, I mean, it wasn't the best answer, but I also don't think it was more like a steal your homework type.
The reason I'm nitpicking on this is because, and Austin did a good comment in the chat, I think this is the problem with the culture. Like, if he can't tell the vision, what are the employees saying? Right? Like that to me is, it sounds like it's nitpicking, but it's more so one of those things. We're investing in founders. He's not a founder. And then he gives an answer like that. It was just, I don't know. It was really weird. But the tech company thing, you realistically think they could be a top 15 tech company?
On my list, yeah. So what's the actual top? Is it 600 billion?
If you assume 250 or 200 billion, do you think?
Definitely.
How do they get to a $200 billion market cap?
Two pieces to the puzzle. Loan platform, which I honestly think will be the biggest product release that they've ever done.
Yes.
So today they just announced unbelievable news. Like it completely changed the game. And then two would be Galileo. So that was one interesting thing that he did say is they said, if you had an unlimited amount of money, what would you go after? And he said, we would go after every payment rail. Like they really do want to make, SoFi a massive part. If you could go to my latest tweet, it tells you why this deal is so big.
All right, why don't you explain this for everyone?
Okay, so SoFi does loans. They give out loans to their members. However, this most recent deal is not loans on their balance sheet. It's loans to Fortress Group's balance sheet. So they're writing loans for other companies' balance sheets directly. They never touch the loan at all. Okay, which means they could do this on $1 trillion worth of loans. It wouldn't make a difference. They don't need a bank charter for this. It has nothing to do with the bank. Okay. Now, this deal was Fortress Group, which we've dealt with before. They came back, increased the size of this deal by 160%. This deal starts before the last one even ended. Okay. They're going to take all this money because they're now seeing such a high freaking demand for their loans that there's not enough members that want loans on their balance or on their platform to facilitate billions and billions and billions of dollars that they want to have to do essentially every quarter. So they're going to have to go out and get more members, and they're not paying for the customer acquisition cost. These clients are. So there's multiple companies now: BlackRock, Fortress, what was the other one? Blue Owl Capital, Focus Edge, or Edge Focus, whatever it is. All of these companies are buying loans from SoFi that SoFi is not touching at all, which was the Upstart model. Upstart was this insanely popular startup company that said, hey, we are using artificial intelligence to underwrite better than any other company. But their vision for what they wanted to do is what SoFi's actually doing. And that's why I'm super excited. This was the biggest news that SoFi has ever seen.
And that's an area where they have an edge. Like SoFi absolutely does. Like Robinhood can get into lending, but they can't do it as effectively as SoFi just because they don't have the banking charter, banking license. They can do a lot of great things. I'm not saying that they can't go in that industry and disrupt it, but they've got a great advantage there. Robinhood could not do a loan platform business at this point. Down the road, at this point, who knows? I'm not going to say they can't do it because I'm like, wait, it's just Robinhood we're talking about, and they can do a lot that I don't expect. So
why does a loan platform take them to 200 billion? Because I get it's good news, but what is so amazing about this?
Well, essentially, the growth in 3 quarters will go, or in 4 quarters, went from 0 to 1 billion to 2 billion to 4 billion. Like Upstart entire business does on great quarters between 1.5 billion to 2 billion a quarter, and SoFi in 2 quarters will do 4 billion. That's insane growth. Like we're talking complete reacceleration of growth, like way past 30% year over year for total revenue. Incredibly high margins because they have no risk here and it's still a lending product, so they can charge 50, 60, 70% margins on this product. It's a golden product to sell, and no one else can quite do it like them.
I don't see how that takes them to 200 billion, dude.
I don't get how you don't. The lending is multiple $1 trillion markets.
It sounds like they are increasing the lending business without taking the risk. I don't know why that gets some aggressive multiple that's so exciting over the long term, or not over the long term. I would say over the next 5 to 10 years.
Well, I feel like you want to be on that side of the argument, so you're not trying to see it
I'm
at
just
all.
saying, I think there's a reason the stock didn't react to this news after. I don't know what if this is the avenue they're going in, then this whole one-stop shop is dude, this is not SoFi's vision. SoFi's vision was to give out personal loans, underwrite, be the one-stop shop for financial services. This is now, hey, we're just gonna pass off the loans to you and try to not take this. It sounds like a pivot of the kind of original thesis that SoFi came out with in the first place.
It's always been the goal. So they had taken some steps to keep things on their balance sheet whenever interest rates were increasing very quickly. But there's always been a loan platform business. They just haven't underwritten it themselves. So that's what's changed. So instead of another company taking all the money and them offering a marketplace for loans, which they've always done, for many, many years, now they're underwriting because now they have the skills to do that as well. So now they're taking all the profit. But I wouldn't the reason why SoFi is Like, doesn't SoFi make more money than Palantir? Like,
You could have the Palantir debate. Like it. That's
no.
not
All I'm saying is the thing
It
that
doesn't
held
matter
back.
because Palantir gets a multiple because it's actually cool.
I get it. Cool. The thing that's held back SoFi is that companies will look at SoFi like a bank and price it to price to book, not to future growth.
Oh, you're wrong. The reason what's held back SoFi is Noto doesn't know how to actually explain what's happening at SoFi. That's what's held
So
back.
I'll disagree with both of you there. I think the reason why a company like a Palantir gets the premium that it is, like there's a variety of factors. I think the biggest factor is the moat. And most people realize, Tanner probably doesn't realize, maybe you do, Tanner, but they have an insane moat. Palantir does. Robinhood has a good moat. SoFi, I think the market doesn't understand and appreciate that they have an excellent moat when it comes to the loan platform business. Like, not just but it's this agreement that hit today. It's very telling for a couple of reasons, not just because of the monetary amount, but because we had concerns that in this kind of macro environment that there would be, these agreements in place, which are great, but maybe they say, hey, slow your roll. We don't want as much as we initially thought. Instead, they double down. They say, yes, give us more loans. We want that. And I don't remember. It was Fortress and started with an E. Echo. It's not Echolocation. Echo Fortress. No, you'll have to help me out with it. Tanner, but
Edge Focus.
Yes. So they partner with Fortress on a lot of things. They're working hand in hand with a lot of stuff. 1.2 billion out of the 3.2 headline amount basically is inferred by the tech platform that's a collaboration between Fortress and the E1. And it seems like, you look at the words and the verbiage that they're using, it's like, wow, this is like very similar to what SoFi is doing. And in essence, if a company that has had good success leveraging data to make informed decisions as far as loans and see that very, very well, if they're going to SoFi, it's showing like, A, there's almost insatiable demand, and or B, SoFi has a little something there that people are realizing and saying, hey, we want more of what you have. Give us as much as you can. I mean, not quite at that point, but we're seeing deal after deal. So that is where the market is absolutely wrong on SoFi. Like the tech platform, I'm like, it's probably just mediocre. I don't buy into the AWS tech of fintech. I don't think there'll be a top 15 tech company, but sheerly on the strength of the loan platform business, there's a lot that they can appreciate on. And that, so the market, I think when the market understands, so one last thing, Tanner, and sees like, hey, they have a compelling moat here, and it's pretty much indisputable, that's when we'll see a lot more premium on SoFi. It's not going to be top 15, but it'll be a lot higher than where it is now.
Here's what's interesting. Okay. Whenever SoFi connects to a bunch of different financial institutions, and by the way, I'm not saying that there will be a top 15 tech company. Can they get there?
No.
That's what you asked me. How do they get there? There's definitely routes to get there. Absolutely. Look at Galileo. They service 170 million users. Okay. No, they don't.
Galileo is not how they're going to get there. I mean, like,
they have 170
I
million users.
guarantee you 100% Galileo is one of the only ways that they get there.
Yes, which is why they're not going to get there.
Yeah, but if the loan platform business and Galileo are completely disconnected, but there's a 100% way that they connect, and you end up offering the loan platform through Galileo, you're talking about a massive expansion in their loan platform.
Why can't Robinhood do a loan platform?
Well, underwriting's very hard. And
okay, but so is the credit card. So again, my question, and Robinhood's crushing it with the credit card. Why can't
you have no idea how they're doing on credit cards?
Well, I mean,
what's their default rate? I'm curious.
Okay, so they've taken a very conservative approach, still conservative, 200,000 out of 1.2 million. I would say they're figuring it out. I have a lot of trust they're going to figure it out. But my point is they've entered into the arena and they didn't give a what about anyone who was already there. So my question is, why can't they do that with the loan platform?
I mean,
I
they,
think they
eventually
will.
maybe
Just why couldn't they?
Maybe they can eventually, but they don't have the data like SoFi does. That's very specific to the loans of the vintages. Like you look at the vintage of their loans, and it's very, very good. And usually bears are like, oh well, yeah, it's temporary. It's going to do X, Y, and Z. They're like, yes, we do expect normalization as it was before COVID. They've not even seen that. Like
My point is, if Robinhood could do it, then this whole SoFi 20x 200 billion on loan platform is like already that thesis. Like, what if it gets disrupted?
I mean, like, so even if they did, Amit, like there is such demand for lending and this kind of lending, credible lending, that it's completely fine in that case. Like the TAM is immense, and really who they're disrupting is like the old guards, not SoFi and Robinhood. Both could survive in that.
I think people discount how much growth SoFi has actually seen. Like they really have historically grown insanely fast, and that's not due to bad marketing efforts. There's people in the chat here that are saying, you know, SoFi to zero and stuff, or how bad their loans are or whatever. You guys haven't looked at the company one bit. They're like their loan performance is way out succeeding their competitors. In fact, I could actually probably assume that if Robinhood gets into lending, that they probably will look to someone to help underwrite those loans. Now, that might be Upstart, that might be SoFi. Like that's how big the loan platform business is, that it's going to grow to a position where they're underwriting loans that are not on their platform at all, right? And you'll probably see that soon. And so everyone that's saying, you know, loans are risky, you guys don't even understand the product that they're selling. There's zero risk to this new product. That's why it's going to get completely.
What's the catch here, right? Zero risk, maximum upside. What is the downside to them going this route?
They make a little bit less money than they would if they held the loans themselves.
Yeah,
but their capital
slow growth.
At that point.
But hold on, it's slow growth, and you're telling me it's going to 20x. So
it's not slow growth. You're saying what's the downside? Possible slow growth. Like Robinhood could have possible slow growth if the market is bad for the next 5 years.
I'm asking what's the downside to the loan platform? What's the issue with that?
It's not as good as holding it on your books, but you can only, like SoFi has used up their whole book. So you can only hold so much regulatorily capped. Okay. They're capped all the time because they're maximizing their loan book. Okay. So they have to continue to sell off their book and then refill it. But that's a lot of work for them. So
they can have an unlimited amount of loans that aren't on their balance sheet, essentially. And that's
exactly.
excited about this.
Completely unlimited.
And right now they have 5.5 billion roundabout.
What does that mean?
3.2 today, and then I think there was
3.2 today. Blue Owl came out a month ago, asked for 5 billion. Fortress came out with 2 billion. BlackRock came out with a 250 million. So in the last like month, 2 months, we saw $8.2 billion, where before we only saw 2. So it went from 2 to 10.2.
And you think this can become 80 billion one day in terms of loans?
Absolutely.
To give you an analogy, this is their AIP.
Yes.
Like when Palantir launched it, it's like this changes the trajectory of the company. It changes what the company can do.
It's what
the market did not realize it right away, and I didn't either.
Yeah, it's what took it from 7 to 18.
But so this part I'm struggling with here is that if it's so easy to just do this, there's other companies like
it's not easy to.
No. When I'm saying it's easy, I'm saying
Palantir 17-year.
No.
They've been doing it for so long.
You're saying there's no risk, and they get a smaller fee than holding it on their balance sheet. But that means other companies would be interested in doing this. Like that's how capitalism works.
A lot of them do.
So why isn't this commoditized?
Because underwriting is really hard, and that even with artificial intelligence, underwriting will almost never get solved because there's always something better, right? That's why.
So is SoFi having an AI oriented underwriting process to this?
They all do. The whole Upstart thing about AI underwriting, it's bullshit. They literally all of them do. So, like.
No, my question here is, what is the differentiator then? If I give you that this is an amazing platform, how do they get to 80, 100, 200 billion in loans, right? There has to be something differentiating them from the Upstarts of the world and everyone else.
Yeah, I mean, it's the same similar sort of feats that you would separate Robinhood from IBKR. Small features that, customers stick on their platform rather than theirs.
And,
They
and
have a
they're-
really good
Hold on. I need to understand this. So is the loan platform contingent on member growth?
Yeah.
Okay, so this was a
But it doesn't have to be. It is right now. It doesn't have to be.
These loans are going to SoFi members, correct?
Right now. Yeah.
But someone else is giving the loan.
Yeah. It's their money. Someone else's money.
So SoFi is just like giving an affiliate referral link to their members to this other person.
No. You would go and ask for a SoFi personal loan. You would apply. They'd say you've been accepted, and then you'd get money in your SoFi account. But it's not SoFi's money. It's actually a different company's money.
Okay, so this
Yeah,
comes down to them growing the user base.
Yeah, but Upstart had the exact same. So we've already seen how this plays out. Whenever you get massive supplies of capital, they go out to advertising platforms like Google and ask for extremely hot leads. Like, we want people who are looking for or who are searching personal loans now, like, that type of thing. So they pay a really high customer acquisition cost, but it's not them paying for it. It's already been paid for. So their customer acquisition cost will skyrocket, but it's guaranteed member growth. So SoFi is going to do that exact same thing, except the difference is Upstart, and we've seen it with Upstart, they've been able to 4x their revenue quarter over quarter. This is why it's so exciting, because there's just unlimited capital in the US. But unlike Upstart, who has nothing to cross-sell, once they go through SoFi's doors, it's not just a personal loan. It's a checking account. It's a credit card. It's everything else. But they didn't even pay for the customer acquisition. A different company did. This is a completely new strategy for SoFi. But these deals need to keep happening. And the next worry is, are all these deals coming in because SoFi's loan platform is so hot? Or are they trying to front run some rate cut or something like this? So there are still concerns. That's why the stock's not running. But if they can continue to, do what they're doing, like, this is a growth trajectory. Like, 3 quarters ago, they had 100% of their personal loans on their balance sheet. Now, probably in the next 2 quarters, about 45% of the personal loans that they sign won't even be theirs. 45% in like 3 quarters. That's insane. I don't know of another company that's done that.
If it comes back to user experience and like members, that's where I default to being more bearish on this, because I'm like, okay, if Robinhood can offer a credit card and millions of people sign up, I feel like they can offer something like this pretty soon. We already know, we've seen leaked memos of them asking, hey, would you be open to paying a little bit more for gold for a discounted mortgage rate? So I feel like this is down the pipeline. They can't issue the loan because they're not a bank, but they can definitely do this connecting stuff that SoFi is doing.
So let me push back a little bit on that. Connect to SoFi. Over to you, Tanner. Signing people up for a credit card is the easy part. A company could come out and promise 6% cash back.
Yeah,
it's not sustainable. They will need to go out of business or stop that real quick, but they could get a lot of people to sign up. We're too early in the vintage, in as far as the size. Like, it's working well for Robinhood so far with credit cards. I'm optimistic that it may be neutral or even maybe a little bit accretive. Flywheel effect, it's very good. But we don't know how that will perform, especially as they ramp it this year. So, and Tanner, I'll kick it over to you.
I heard a little bit of what you said.
He was texting his SoFi rep. He's like,
I was just pushing back on like credit cards. Like, it's the easy part of credit cards is getting people to sign up and
exactly
things. Robinhood has done more than just that, but I wouldn't take it as a success story yet. It's a little bit too early, and I say that as somebody that's optimistic on this, to say that it's a roaring success and it was easy. Because like, even if Robinhood pulls it off, it's not that it was easy. It's that Robinhood is a freaking incredible company that's able to do things that other people are not able to, or they think that it's impossible. So likewise with the loan platform business for SoFi, it's easy for them because they're exceptionally good at it. They are exceptionally good at this. That was their initial bread and butter business, was loans, specifically student loans. And they've made a name for themselves to the point that other people are seeking them out. Now, they're not the only one there, but they execute very, very well on that. And I'm the first to call them out when I see an area that they're not executing on. So,
yeah, we do need them to perform better in other angles. And right now, I hold more SoFi than I do Robinhood. I'm actively adding to Robinhood, and I'm not actively adding to SoFi.
Yeah.
So some people go, oh, well, if you're so bullish, why don't you have 100% of your portfolio? Because I can't foresee the future and things can happen that I don't foresee. And so like,
no, that's stupid. Those comments are stupid. But my thing here is like, I don't think the street gives SoFi the multiple you're looking for, even with the loan platform growth. I really genuinely believe this is a question of communication. And this is a question of Noto getting people to believe in this amazing vision that comes from the loan platform, which, again, I thought SoFi was a one-stop shop for financial services. Now you're telling me it's more of a loan platform upstart type of business that's going to be driving the growth. Galileo, I don't even think is relevant anymore.
But remember, it depends on how you see it from the back end or from the front end. If you're a member on the platform, you don't even know that they have this back end. They're not telling you that the loan that you just got is Fortress Group. So to the member that comes up, they do see it as a one-stop shop. That is what they're advertising. They're not going to advertise the back end. But hopefully investors do know, and they need a lot more pushing of this. But this literally happened in the last 2 quarters. Like, this didn't even exist before.
I don't think this is what gets people to care about. And I still have my options. If it gets to 20 this year, I'll be a very happy man. But
I think it's going to happen.
I really hope it does. But I don't see people getting excited about this. Like, I think like crypto, people will get excited. Maybe it gets a little bit of a Bitcoin multiple there, but like, I think Bitcoin moves the stock way more than the loan platform growth.
So here right now, they're doing the loan platform business for personal loans. What happens whenever they do it for student loans? What happens whenever they do it for home loans? Okay.
Yeah, that requires them to actually like execute.
What?
That requires them to execute, though.
They do in this area.
But they do in capital markets. They absolutely do.
They excel here.
Yeah.
I would really love to see it, dude.
This is Noto's background.
I doubt all day long, like the tech execution at this point, level 1 options, the invest side, the crypto platform, it'll be there when they're able to. But this is their wheelhouse. They excel at it.
They literally they've already surpassed Upstart in terms of what they underwrite per quarter, and Lending Club and all the other companies that play in this space as well. And they've been here for 2 quarters. Like, if there's one thing Noto does do, it's capital markets. But this is why I've always thought that, like, I really do think that, like, Robinhood is going to be that mix of Bank of America and Schwab. And, you know, SoFi is going to be more of the Goldman Sachs, Morgan Stanley. Like, I think they're going to play in a lot more of those things. I think the first company to IPO another company is going to be SoFi. It's not going to be Robinhood. They do a lot of the back end financial services for sure.
Yeah. Look, it's fair. I think obviously both can be massive winners. It's just my beef was with the podcast. I could not believe some of the words I was hearing. And then I don't like delusion. Like, I know a lot of the SoFi bulls on Twitter were so happy that Noto said that. And first of all, this is the first time I've ever heard him say top 15 tech company, and he specified by market cap. So he wanted people to know that he's talking about like hundreds of billions of dollars. And then 2, I'm just like, well, how do you get there? And I guess we'll see if it's loan platform or Galileo. I don't think it's gonna be Galileo. I don't think it's gonna be brokerage. He kind of admitted it's probably not brokerage, which means it has to be loan platform. Yeah, which means it has to be loan platform then. That's it.
But it will be Galileo too. Galileo is going to be a big part.
We'll see. I would love to be proven wrong on it, but
go back to their freaking their 2020 presentation. They said early on, back whenever they had 50 million members on Galileo, they said they wanted to cross-sell loans to them. Now they're at 170 million.
At the projections that they had for it, I know it was Technisys, but I think it was also Galileo too, as far as tech platform revenue in 2025, and they're not going to hit it. They're nowhere close. They're as laughable as PayPal's Investor Day back in 2020, like what they're projecting for 2025. It's just wildly misguided, wildly optimistic. Had no idea. Yeah,
it was one. You're acting like they missed the whole thing. They landed on financial services. They landed on lending, and overall they beat.
Yeah, tech platform is what I'm talking about specifically, and the revenue is the most important number there. You can sign up all the accounts you want in the world, but if you don't monetize them, what are you doing?
Yeah,
I would love to eat my words on SoFi, dude. Like, I would really love to eat my words on it because I don't have any.
Platform business do that.
What do you say?
The loan platform business might make you do that. Like, you're underestimating that.
Because
you have been.
I'm not short. I don't hate Noto or anything like that. Obviously, I love Robinhood, but I don't have any actual beef with the company. I just I got into it a couple of years ago thinking that it was this AWS and fintech one-stop shop. And then slowly I was like, none of this is happening. And now it's a loan platform thesis that popped up in the past 2 quarters. So I'm just like, you can see my skepticism here being like, oh, so this is the new thesis I have to believe in. And I just don't know.
If it was the loan platform business and we didn't see any like big deals like we did and we saw a little bit of revenue, I'd be like, you guys are just moving goalposts and that's it. No, we're seeing a massive amount of revenue that they're making from this and massive players making massive deals very rapidly. And the remarks that they're saying are incredible. This is their AIP.
All right. Well,
You don't got to believe.
well, I obviously don't because I don't have a massive position here. But the top 15 tech company comment.
Yeah, that's
what
wild.
what would be the actual number there?
I think it would be more like when you say tech company, I start going into the IBMs of the world, et cetera, the Palantirs. And so I'm like, maybe top 75, top 50 maybe is a bit more reasonable.
75 is smaller than you think. But yeah, the thing is, even if it was 150 billion, which it's a little bit more, it looks like 165, maybe 170. Those companies are probably going to grow. SoFi is not instantly going to get there. So by the time, like, let's say 10 years out, like that's going to be what, 350 billion, maybe.
Exactly.
Probably actually higher because there's a whole lot of very fascinating companies that are much smaller market caps that are growing rapidly. And they will do Palantirs. Like they'll 10x, 20x.
Right.
So I really don't, but I'd love to be wrong. I really don't believe the top 15 tech company. Financial institution, maybe. It could, I think it could get there. And there's some huge players there. So that's just as good. Not quite, but it's great.
But it'll be interesting to think who is going to get there first, and that's really what we're betting on here. It's not that honestly, a lot of companies grow. It's about finding the ones that grow the fastest, and it's either Robinhood or SoFi. And I'm growing my position in Robinhood because they are very clearly outgrowing their competition.
Why do you think Chris Camillo isn't this bullish on SoFi?
Well, I think that, that's kind of hard. Potentially metrics that are easy to gauge, potentially.
But he's a pretty damn good investor. He's not a stupid guy, right?
But he likes consumer products. I don't know if there's a company that he's invested in that does a lot on the back end. I think the things that he's benefited off of has been things that are done on the front end. Which there's no problem. I love Chris Camillo. I follow him. But
I'm just using it as a metric because again, SoFi should be encapsulating investor interest. And it can't just be us. It has to be some of the Chris Camillos of the world that actually have a lot more money than all of us and can really deploy heavily and can preach about the thesis. And it's just not. Outside of the SoFi bulls on Twitter and YouTube, I don't find people that are interested in any of this.
That's definitely where they fail.
Since people were wondering, the jersey behind, I just broke the hanger. It'll put back together is the Robinhood jersey patch, Miami Heat jersey. So
sweet.
Yeah, I need to get one of those, bro. I need to get one of those.
I've got some more Robinhood news if we want to go through kind of a rapid fire.
Dude, we don't have school tomorrow.
Yeah.
Stock market's closed. I feel like a kid who doesn't have school tomorrow, dude. It's a long weekend. Like, it's crazy.
You're going to work just as hard tomorrow. I already know. Nothing's going to change.
So this, I know it's Kalshi, but Tarek Mansour, the CEO of Kalshi, co-CEO, I guess, he announced this. It's a little bit over a week ago, a major legal battle that was won in Nevada. The big dogs that were trying to shut down specifically their sports betting events contracts. And there were several other states, including amidst New Jersey, because New Jersey hates fun and hates people pumping gas and stuff. So I don't know. But this is pretty huge. It's not the end of this legal battle, but the fact that they granted Kalshi's preliminary injunction and they blocked the state from trying to prevent Kalshi spells pretty good things also for Robinhood as well, because Kalshi is their partner when it comes to the events contracts that are sports betting. So I thought that was pretty fantastic news And then related to that, two other things or actually just one other thing on it. Two others. So they launched some non-sports events contracts, and they really built these out. So Fed's fund decision in May, Fed's fund rate in May, and inflation in April, and so forth, even gas prices as well. And I know these probably will not get nearly the attention that the NCAA tournament had, but they also launched Masters betting. Kalshi had said that there was very good traction there on that product. I did see Robinhood, I think, took away the volume amounts on their platform. At least I didn't see them for Masters. But yeah, I thought that was really fascinating and interesting. I got one other thing too, but what do you guys think about all that? The legal battles with the events contracts, the non-sports stuff, the Masters.
It's not an asset class, but it's their next big product. I think event contracts is huge. It doesn't have to be messy or gambly. It can be in product or it's always going to be gambly, but everything is gambly. But in areas that people respect, like CPI or Fed decisions or whatever you might determine as that. But you're seeing this from every single brokerage, IBKRs to you're going to see it in Schwab. I even think you're going to see it at SoFi. So the fact that Robinhood is front running once again, the next big thing is something that I love about them. And this is going to gain more member growth. We're seeing them at the top of the App Store based on new products that they're releasing that people love other than just what you're already known for.
Yeah, I think, I think anyone who meaningfully doubted the event contracts part of the business, I think it was a fun debate we all got to intellectually theorize about a couple weeks ago, but this is the future. It's happening. And it does not need to be in a separate app. It does not need to be off the platform. It needs to be incorporated because and I loved hearing different perspectives and point of views, and I love debating DDI. I love debating Roy, but I mean, dude, this is it's happening. There's going to be millions, tens of millions of contracts traded every day. There's going to be pop culture events, maybe NBA playoffs. This is going to print money for them, and they're not going to make a ton of it right now, but it's going to set up a foundation for this to be a DraftKings one day. And that is what you look for as a technology company when you look for a 10, 15, 20x. Is how can they monopolize different verticals, bring them into their user experience, and just keep up double-digit or even triple-digit growth? I think it's going to be a big success.
Did you guys see that post? I have it somewhere, but the March Madness by volume by each player in that space.
Let's
see if I can find it.
Give me 1 second. I have it. Kalshi actually messaged me. He was like, "Hey, this may interest you." I'm like, "Okay, cool."
Yeah, they messaged me about that as well.
Okay, I've got it.
Okay.
The message me, bro, is being overthrown as we speak. Insane volume by Kalshi, and you can see here. Yes.
Okay, so the
Kalshi plus Robinhood is beating as far as total volume of money. This isn't just contracts traded or anything. FanDuel, DraftKings, all of them.
So hold on. Robinhood for March Madness did over 100 million. We know that.
How do you know?
Josh tracked the volume for every league. So you can find his last tweet. But yeah, it was over 100 million, which places them in fourth place. Okay. Which puts FanDuel first. It would mix it all up if you didn't add those two together.
Yeah.
But the craziest thing is that they're fourth place. You know what I mean? This just started.
Yeah. No, this is why I'm neutral on it. As far as revenue, it's a great thing for them. So.
Yeah. Let me try to find the Josh tweet if I can. But yeah. Also, let's not forget the growth in App Store. Do you guys think that was just here, I have it here.
I think it was related to this.
This was his thing that he was sharing. He was tracking all the contracts and then the total money there. He put Robinhood's revenue at 4 million. It wasn't 4 million. It was about 2 million because they take a penny and Kalshi takes a penny. But total money traded was true. 105 million.
Yeah. So 2 million in what, a month?
We have huge news. We didn't talk about this.
What happened?
This was crazy. I'm just going through this presentation that I made.
Oh shit, we didn't talk about this. This is big news. I forgot.
Robinhood received a Category A brokerage license in Lithuania.
Yeah, that is big.
Dude, there was so much Trump tariff shit all week. I forgot about this. You're right.
Well, that was like 8 or 9 days ago, so it's hard to,
we delayed it a bit, but
yeah.
So my understanding whenever I was researching this is that there's a method called passporting where a company in different areas of Europe are able to offer financial services throughout Europe because they hold licenses in certain countries. So the UK opens up parts of that, but not all of it. Lithuania opens up parts of that, but not all of it. And it's just seeming like this is more of a strategic way of enabling financial services in all of Europe. That was my understanding.
I agree. I think you're completely correct on this. This is not. I don't think they care that much about Lithuania. They just care about slowly racking up the licenses across Europe, and then inevitably expanding with the brokerage product across the continent.
Yeah. Let me see what else. What other news we had. We talked about all that. Really high app stuff.
So they're not high on the App Store anymore. So that was like a week-long thing. So do you guys think that was because of the NCAA stuff?
Yes.
Yeah, probably. But now we have Masters. Like they're just going to keep up with this. So yeah, even this, like I was just tracking a little bit of the days that we were seeing March Madness. If you want to, yeah, there's all the stuff that we covered, I think. Website traffic, did we cover this?
No.
Website traffic, quarterly website traffic was an all-time high. Yeah.
We kind of expected this though due to the volumes, so it made sense.
Yeah, that's all.
And I've got one more. Actually, maybe two if we want to talk about Webull after this too.
Oh yeah, that was my last topic. Yeah, Webull. Yeah.
So Vlad was posting a lot of different things about planets and outer space, and they were all vague like this with the same kind of odd art. But I don't know. I might have just been spending too much time in the market, but he talked about 24/7 trading before on the blockchain, tokenizing assets. I'm curious if that's what he's alluding to. He's just hinting like, hey, 24/7 is coming at some point to Robinhood, maybe sooner than you expect.
So let me be a little skeptical on Robinhood here because I was skeptical on SoFi as well. I think that thing is a far time away, bro. I don't think we're going to be able to trade tokenized shares of Apple on Robinhood like for years, to be honest. And I hope I get to eat my words on this too, but I really don't think that's any time. I think there's a lot of regulatory shit they got to deal with, along with the infrastructure stuff, to even think that the people that control the stock market would be okay with someone trading Apple on a Saturday at 4 p.m. I don't see that happening anytime soon.
I think it could happen this year.
Why? Why would you say that?
Two reasons. One is they're a lot better at compliance. They have a lot of connections with higher up people where they can float these sort of things instead of just hope it works out. And the second is their culture is now legally they do have to do some certain things. There are some regulations and certain things that they have to take care of, but they tend to push the line as much as possible. And I don't think that they're going to wait until they'll do what they need to do legally, and make sure as far as regulations that they're there, but they're willing to push the line a little bit too. So I don't think that they'll be, I don't know that Vlad would have been floating out something like this in his letter. Was it New York Times or Forbes? Or the fireside chat where he brought it up again.
I think he's incepting the idea like a good communicator does before the idea launches. But I agree with Austin, dude. You think the New York Stock Exchange and the NASDAQ are going to easily allow tokenized assets of Apple to be traded? Like, I don't see that happening anytime soon.
I mean, as much as you might say that, like, those are now offering 24/5 trading. Like that, they're open.
They're now offering it. They want to.
And yes, you're correct. Like they're moving that direction because they know that's the direction that's heading. It's not that much of a step. So switching from just normal market hours, there's no pre or after market. Switching to pre and after market, that was a huge leap that we don't remember because we weren't in the markets like as individual investors at that point. it was a pretty big leap to go to 24/5 trading. And a lot of people were like, no, this is going to be disastrous, but not as many as before. Going from 24/5, where we already see certain commodities, this crypto, being traded 24/7, they don't even stop for holidays, is not that big of a leap. It's just not. And we also are in this time where we have the administration and the SEC that is very favorable towards common sense regulation and toning down, trying to stop every single bit of innovation. They want the United States to be leaders here. I wouldn't expect it this year. I'm just saying it could happen this year. If it doesn't happen, like through 2027, I'll be pretty surprised. I think probably the most likely thing is within the next 2 years, we'll see it.
I wouldn't say that's crazy in the next 2 years. I don't know. I just think it's a hard freaking, if they do it, I'll be really impressed. But I don't think it's that easy.
Yeah. By the way, guys, there's no cat in this room. You guys are... There was a dog in this room, and I turned my camera off to let the dog out of the room. So there's officially no animals in this room.
You have a dog and a cat?
Yeah. And you've known this.
Do they get along though?
Yeah. Yeah. My dog doesn't mess with my cat. My cat likes the dog.
Dan seems like a cat
Let's
guy.
talk Robinhood. I'm definitely a cat person over a dog person. I don't even like the dog, but no, I do. But it was not my decision.
Wait, hold on. I don't even like the dog. That's so rude. Like,
no, I like the dog, but I like the cat more for sure. I've got a favorite child. All right. It's not remotely what I want to talk about.
I think that's it. Do we have any other topics?
Webull.
Oh yeah, Webull. So Webull went public today or last week. They were at $78. Now they're back at 26. Yeah, they did 300 million in revenue last year. Robinhood did 3 billion. They were about 20% away from being worth as much as Robinhood the other day. So yeah, Roy, what was your reaction?
I was very sad that it's extremely difficult to short companies that are fresh off of IPO. I don't short companies. If there was an options chain, I would have bought puts because it was ridiculous. At one point, Webull had almost the market cap of Robinhood. They're not profitable. They're not growing as fast. They're not as innovative. They're basically a Mr. Pibb if Robinhood is Dr. Pepper. Like they're okay. They're not bad, but they're not the original article. They're an imitation that's cheaper. And it's exciting though, just because we have another data point here where we can look at and see. You know, it's nice to have Schwab. It's nice to have IBKR, but Webull is probably as close as we get as a 1-for-1 comparison with Robinhood. And I love having extra data points, and we can actually look and see as Webull begins to have earnings releases just to see how they perform, how they execute. And that'll give us an idea of how Robinhood is really doing. I mean, like they excel. We know that they excel, but I think that'll differentiate it even more in people's minds. And I'm also really glad to see IPOs do very, very well initially. I know, people might get burned on some of these, but like Newsmax, that's great. Webull, that's great. I hope Klarna does IPO after all. And the more IPOs we have of credible companies or incredible companies in some cases that people are excited about, that benefits Robinhood, that benefits SoFi, that benefits, any other brokerage that's out there. It's great.
Benefits Webull.
It does. Yes, true. IBKR, sure. Schwab.
The interesting part here is that, like, whenever I got into the market, you kind of listen to the legendary investors to kind of get grips of how this game is played. And one thing that you learn pretty quickly is that the IPO market is messy, and one that is not really played by a lot of the great investors, and they let these things take their time. That being said, the new investor will come into this market and see the unbelievable stupidity that's happened over the last couple IPOs and think that IPOs are like, it's a ticket to free money. And that game is going to continue to get played out until it isn't. It's almost like the new dog coins that got released, like Doge worked, then Shiba worked, then, all these ones. And then people just started releasing a bunch and they never worked again. So if you're a new investor, don't think that this is a free money glitch. It absolutely is not.
My friend put $500 into Whiff, dog Whiff hat.
Probably
Turned
made
it
some good money.
Turned it into 2 million, bro.
That's awesome.
Actually?
No, like legit. I saw it.
And they sold? Hopefully.
I don't think he sold. No, at the very top, it was worth 4.2. But he got in early, but then he sold, I think, at like 1.7 or something.
Was this a person of means, or this was their first $2 million?
He has a tech job, so he does very well for himself. He's innovating in the crypto space, so he understands crypto really well. That's why he knew the meme coin culture. But I don't think he didn't need the money because he has a good job. He's doing well, but like obviously, a couple million, $500.
Dog Whiff Hat is a coin that was built on what layer one emit? Solana, baby. Solana. And that's what I am signing off with.
Well, here's
That's
my thing
actually
about Webull.
great.
My thing about Webull is I really don't like it. I think this is an unhealthy market where people are selling off big tech and jumping into Newsmax, Webull, Fart Coin, which is another coin that's worth almost $1 billion. I really hate it, dude. I cannot stand it because I don't gamble on this stuff. Seeing other people gamble on it and then have it come all the way back down. You see it every single time. People get in as it's running up and then they bag hold. It's just, and it turns people off to the markets because they think it's a scam. So I hope this stuff ends soon. It's weird that this is happening in the midst of the volatility we're getting, but my thesis is people are so annoyed with good companies like Nvidia that they're going to Webull.
Yeah, people are annoyed and tired with Nvidia, and that's the time to buy. Really, is when people have like dead money, dead company. It's never going anywhere. It's like, do you not know what Nvidia is doing? There are some issues.
Yeah. Whenever we have another conversation like this where I say, "Oh, SoFi's going to 200 billion," and Mick goes, "How's it doing that?" And then we have another conversation. I say, "Nvidia's going to 10 trillion." He says, "How is it doing that?" This is your time to buy.
Well, hold on. Nvidia to 10 trillion is a lot more reasonable than SoFi.
That seems inevitable.
It does, doesn't it?
I will be the guy who buys SoFi at $20 after I see the potential, because I'm not like, there's like people in Palantir, right? They're buying Palantir at 50 or 60 because they see the potential finally after it's proven, whereas me and Roy were at 7 or 8 because we believed in it. I don't believe in it before it happens on SoFi, and then I will rightfully not get the types of gains that Tanner and Roy get, but I will sleep a lot better at night.
I was the Robinhood at 17 guy, by the way. I was a lot later.
You needed a little bit more to see. I think that's a normal thing to say, and skepticism is what makes a market. But it all comes down to Noto and the fact that he did a podcast with Liz Young, like I just thought that was ridiculous too. I'm sorry. Like, why are you doing a podcast with your own employee? When's the last time Vlad did a podcast with a Robinhood host asking him questions? Like, they're just gonna give you layups. Like, it's not even a podcast, dude.
It was definitely wrong in terms. I think like the actual the only reason why I got any views was because of people like myself or Couch Investor or other people that shared it around. I think that the actual podcast has like 300 views. Like, it's something dumb like that.
Yeah,
so that is a problem.
They perform worse in my channel. So, by the way, thank you guys that are following me.
Yeah,
but I'm new. Like, that's all I'm saying is I'm new. It's not professional. It's very amateur. I've got T-shirts hanging up behind me, like, and it's me, like.
Yeah, but people watch you, Roy, because you're authentic and they like listening to you speak. And I'm just getting vibes that Noto is afraid to talk to other people out there in the world. Like, you're gonna talk to a SoFi employee? Like, I totally was just, what is going? I didn't understand it, and that doesn't delegitimize the loan platform and all that stuff. It's just, it is really hard for me to get behind him. Like, I have a Noto problem. I don't believe him as a leader. That's my issue right now.
I think he's a very good CEO for the type of business that SoFi is.
Yeah. I think he's a Jamie Dimon type rather than a fast moving like founder type.
Yeah, but Jamie Dimon has a personality.
Yes, but like you don't want an Elon Musk or Alex Karp running SoFi. You don't.
I think
Jamie
elements
wouldn't
of
come on my podcast either.
I think elements of Elon and Karp, because Vlad has elements of Elon and Karp, right? Like, there's something people are like, people have to buy the stock at the end of the day for it to go up. And a lot of times people don't buy stock because they look at Tanner's video and they see the price earnings. They buy it because they just have a vibe. And that vibe tends to come from the CEO. We're talking about retail, right? And even institutional dudes, dude. Like they buy off vibes all the time as well. So
Vibe's a real thing. I put that under the culture category. You know, there's got to be a real culture to businesses. You got to feel that excitement. It's a real thing.
the good thing is this is fixable. This is a communication thing. I think it's easily fixable. It's just a question of if it gets fixed.
Well said.
All right,
Hopefully they do an investor day.
Yeah, that is true. Do we talk about NVIDIA for the next hour? Since we don't have
Bro, I've been wanting to go for 34 minutes.
Why? What do you have better to do?
Dinner. I've got to eat. It's 11 p.m. I haven't eaten.
You know, fasting's really healthy for you.
Yeah.
So
I'm actually curious because like I always get called the pale guy. I mean, I am pale. But like Amit, do you get sun?
do I get sun?
Yeah, like you're inside.
Oh,
I see you live streaming every hour of it. Like, do you get off your chair? What?
Yeah. I go for, so after my market open, I go for a walk every day. So there's a big lake in the back of my house, and yeah, just walk around that.
And you're on your phone. You listen to podcasts.
Yeah, listen to podcasts, music. I mean, it's just like I tend to walk every day, and now it's even easy. Like even yesterday was 70 degrees, so it was great. Like I was out for like 2.5 hours, but I get sun. I don't think I get pale or anything like that.
No, I'm not calling you pale. You kind of, you're definitely darker than me.
I don't own my own lake, but it's like in the back of this suburb in Jersey. But in earnings season, no, I would say I don't, because earnings season is like you're pretty much live. And last week, given Trump was live more than me, I was covering that, so it's hard. But in general, no, I try to go for a walk.
I'm in the chat a lot, man. You have a great show.
Today I was at the gym and I went to the sauna. I expected there to be some tariff conversation in the sauna. Because dude, at least in my sauna, in my gym, they talk about everything. Like 2 days ago, the conversation was about aliens. And I didn't even put on my podcast while I'm in the sauna. I'm like listening to these guys talk about aliens. But no, they didn't talk about tariffs. So yeah, whether it's gym, whether it's like walking outside, it's whatever you have to do.
Tanner forgot that bro is Indian. No, he calls me Ned Flanders and I call him a poo.
Okay, no, I didn't call you Ned Flanders. The chat called you Ned Flanders.
No, the funniest one was whoever called me that, the substitute teacher or whatever from Incredibles. I laughed at that for so long. That one is great.
That was Michelle. She got you on that one. This was all right for those that didn't see this, bro. This was the greatest thing ever.
Coincidence? I think not.
It's because of the mustache, bro. Like that's once you get rid of that,
and it's a little red mustache, so it's. I don't know. My whole life I thought I was blonde. Now on live streams, I'm like, do I have like strawberry hair? Like I don't know what's going on. Makes me hate it.
That was good. It's a good one. All right, so that's it for us. Real quick, let me just do a quick plug. I and Tanner will be at.
Yes. Okay. Cool.
Yeah, we're gonna be in Canada. Well, I will be visiting Canada. Tanner is already there. April 26th. If you want to see us both, we'll be having a meetup. Details will go to your email if you sign up in this form. And yeah, it'll be next Saturday. So
Spencer said it's a sauna meetup.
That would be quite interesting. We did a sauna meetup.
I think they are actually going. I thought they said that they're in Toronto as well.
Who?
Spencer. I have no clue if it's a guy or a girl.
It's a girl. I don't think she's in Toronto. But about 200 people signed up. So I'm going to have to find a venue that can... I don't think 200 people are going to come, but try to find a good venue in downtown Toronto. I think it should be fun. And it'll be the all day on Saturday. And Tanner will be late as usual. So you'll get to see
I'll be early that time.
Yeah. It'll be fun. It'll be a good one.
I was here on time. No one said a thing.
Yeah, I literally got here 10 seconds before you did. But then I was acting like Tanner was late, but yeah, I was almost late as well.
Will it be free? Yes, it'll be free.
Yeah. There's no cost or anything. It's just, I'm going to try to, I've done this 2 times in New York and California, and I've successfully gotten a location for free. The bars were just happy that people were buying drinks. So I'm going to call up a couple locations and just say, hey, a lot of people are going to buy some drinks, and I think we'll have a spot. So
dude sells nothing on his channel, no sponsors, no anything, but he's selling tickets at the door. You walk in, you got to pay $5.
Don't worry though, Tanner will be there. He'll be selling tickets to his course. So
Yeah. In-person webinars. Well, I
No,
guess
it'll be-
it's called a seminar.
It'll be fun because at these meetups, dude, people talk about anything, and it's like stock market, investing, options, SoFi, pound. Like, I'm sure there will be such a diversity of discussions, and you'll get to see Tanner. So
If you get pawned off on me from Amit, he's not enjoying the conversation.
Oh my god.
Oh man, San Francisco was fun. All right.
Oh.
You know who's really great at stock picking? Tanner. He's
Dude,
picked
I'm
so
just
many
gonna say
great
this
stocks.
point because that
I'm
guy
gonna go get a
messaged-
drink.
Hold on. That guy messaged me the other day. He apologized for it, so I'm just gonna, and he didn't even need to apologize, but I'm just gonna say it. This dude comes up to me at the Robinhood Gold event after I'm dead tired. It's a long day. I'm sitting. I'm trying to eat my dinner, and he's like, "Hey, Amit, I have 100,000 in Nvidia, and I'm kind of scared." And he starts asking me these market questions, like just like straight up like stock market, like it's a live stream, and you're asking me stock market questions, and I'm listening, and I see Tanner coming by, I'm like, "Hey, Tanner, what do you think about this?" And within 30 seconds, I'm like, "Guys, I really got to use the bathroom, man." And I'm out of there for the rest of the night, and I leave Tanner to answer this guy's.
Yeah, you're like, I barely know what I'm talking about. Tanner's really great at this. He can answer all your questions, and then he was gone. He just had to like fluff me up. He's like, "This is your guy,"
I was like,
and then
"This guy's
gone.
Smart. Yeah, and then the
But-
guy messaged me. He was like, "I'm sorry, I was asking somebody." I was like, "It's not a bad thing. I was just, we were all tired, right? Like it was the end of the event, you know." But at the actual meetups, so far the max we had in California was 70. New York was like 40. I individually spoke to every single person, and I know this because I count the number of cowbells I give out, and I literally gave out the same number of cowbells. So I always had the time to talk to every single person. I don't know how many people are going to show up to this one, but you know, there should be more than enough time to talk to everybody. So.
By the way, that's not like a thing of like, hey, we don't want to talk to people that have questions or something like this. It wasn't like that. It was, yeah. I mean, the whole time that we were in San Francisco, all we did was talk about investing. Like we like, that is what I like to talk
It was
about.
a very personal situation, and like, there's no answer I can give. I'm just like,
Yeah.
do you believe in Nvidia? Then keep it. If you don't, you know, like sell. So it's like,
No, they're just asking for like financial advice. That's all it was.
yeah.
Which I can't give.
But Tanner was a financial advisor at one point, so I was like, hey, talk to Tanner.
I was in the wrong country.
There you go. All right, good
Come to
stuff.
Toronto. No, I'm kidding. I'm not a financial advisor anymore.
Roy has been waiting to leave for the last 5 days. Like, these fucking guys can't stop talking. Roy's
You were
been like,
there
I gotta. All right, good stuff. Thank you, everybody. Enjoy the weekend, long weekend. We'll see you guys probably next Monday on Boyz in the Hood Weekly.
Goodbye.
Bye, everyone. Have a good one.